Hi everyone, I hope you are doing well. I've got an important video for everyone today. This entire year, we've been told that the economy is so strong and that everyone is doing great. Unemployment is low, wages are growing, and people are making more money than ever. For most people though, I don't think that's the case at all. In today's video, we're going to have a conversation about why I think we are being lied to about the economy, why we need to wake up to this new reality, and ultimately what we can do about it. Similar to last time, we're going to talk about anything related to economics in plain, simple English, nothing too complicated to understand. Even teens will understand what I'm saying. Some of my commentary will be entertainment. Look, people are very stressed, so when listening to this stuff, you need some entertainment. Now, the truth is that the US economy has officially entered stagflation. In fact, I think it's much worse than that, and we're in a recession, but no official media outlet will admit it. Now, you might remember the humorous content that our Fed chief just said in the last FOMC when it came to the economy in his latest conference. He said that there is no stag and there is no inflation. That's very funny because GDP just grew at 1.6% in the latest quarter, the slowest in years. When you adjust that after inflation, GDP is basically zero. The job market just flipped lower with only 175,000 jobs being created compared to the estimate of 300,000. Big shortfall there. And white-collar professionals are feeling more stuck than ever. The Fed is playing cat and mouse with their inflation 2% target. The Fed knows that 2% inflation is a dream. It's a pipe dream. It's a joke. It's not going to happen. They keep saying it's going to happen, but it's not. You know, the food inflation that we're seeing at the supermarket, we're stuck with that. The $3 hash browns at McDonald's, here to stay. The $8 lattes at Starbucks, here to stay. In a recent CNN interview about inflation, Biden told a reporter that all this inflation is not a problem for you because all of you have extra money to spend. Now, as for the Fed, they've had the same script for every single FOMC conference, which is their Fed conference, saying the same exact thing over the last 6 months. Look, guys, the Fed has given up on fighting inflation. If they were really serious about it, they would not have begun the process for quantitative easing. That's right. Basically, the Fed is going to reduce the assets on its balance sheet at a much slower pace. And this is essentially an alternative way to get the same effects as the interest rate Fed pivot. They're nearing the end for quantitative tightening, short for QT. So if you ask me, the Fed has already pivoted from fighting inflation and onto easing monetary conditions. I know that this is stunning, but it's true. Most people are focused on interest rates. And on the surface, the Fed did hold rates steady. But in terms of what they're doing with liquidity in the background, which is the force that drives easier or tighter bank lending conditions, they just made it looser. This is easing. So at least until the election is over, the Fed is making conditions friendlier to investors. They're not going to make it easier for ordinary people, though, unfortunately. If the Fed really wanted to squash inflation once and for all, they would have been more aggressive about taming the rise in asset prices, especially housing, since they know that housing is the largest component in CPI. It's not that hard to figure out. If they wanted to bring down inflation, they would have to bring down housing. The Fed's work is really only affecting ordinary people and not investors. This is why even with the terrible jobs market report, the stock market keeps going up. Now, you might be thinking, what's the big deal with the latest job market report? Well, I think it marks the turning point for the economy. Let's see why. Let's dig into the data, the high-level overview. First off, I think that the latest job market report is the beginning of the end of the quote-unquote strong labor market that we keep hearing about. In this report, we have a very important statistic. 175,000 jobs created in the context of average monthly jobs being created of 245,000 over the last 12 months. This means that job creation has slowed by 30%. Out of these 175,000 jobs, almost all of them were created in part-time roles such as healthcare, social assistance, retailing, warehousing. You can read the full report in the link below it, included it in the description. Now, I dug into the data a little bit more, and here's what I found. The job market report also reports the duration of unemployment for people, and we can see that year over year, more and more people have been unemployed by more than 27 weeks. This increase is about 20%, and the numbers in this table are in the thousands. As for people working part-time, take a look at the number of people working in part-time roles because they could only find part-time roles. The job market report classifies that as well. Last year, it was 800,000 people. This year, it's 1.1 million people. This is April to April, year over year, and we can keep following this on the BLS website. So is this a strong jobs report? I'd say no. It shows that a turning point is coming. People who are unemployed are staying unemployed for longer. More people are resorting to part-time work. There are fewer job openings available, and companies are actively looking to aggressively cost control. Here's an example of how companies are in serious cost control mode for the foreseeable future. In an all-hands-on meeting at Google's headquarters, employees asked management why record stock prices, record buybacks, and dividends are not resulting in increased pay even for strong performers. Well, welcome to corporate America. This is because that's how it is. I mean, these are really thoughtful questions from the employees. But because this is corporate America, because this is capitalism, at the end of the day, at a large company, people who add significant value are viewed as assets, and then those who don't do any real work are liabilities. In accounting, you are part of the SG&A line item on the balance sheet. Selling, general, and administrative expenses. Management is going to control that number and minimize it to the best of their ability relative to revenue growth. This is because Wall Street watches that operating account figure. They will punish companies that let that figure grow faster than revenue unless there is a good reason to do so. So morale is definitely down at a lot of companies in corporate America, but the best thing that you can do right now is to keep your job. Just keeping your job right now is honestly the best play. And I know a lot of people want to get promoted simply because of tenure and time spent at the company, but I'm telling you right now, that is only happening if people have a specialized set of skills that are unique, special, and distinguished that the company needs. Otherwise, just keeping the job alone is an accomplishment. Not being on the chopping block is an accomplishment. As I talked about earlier, people who are unemployed now will be unemployed for longer. A lot more people now spend more than 27 weeks unemployed. Folks, that's more than half a year. Before we talk about solutions, Mumu has a special message for my viewers. Let me talk about them for a minute. Now, in terms of brokerages for investors, I would say that Mumu is one of the best brokerages out there because they bring amazing cash interest for their users, and also they make investing quite simple. They offer 5.1% APY plus an extra 3% for your uninvested cash. That's 20 times that of TD Ameritrade. At the same time, they've got many pro functions that help you discover investment opportunities that can bring returns. Because it's the US earnings season right now, you can use the earnings calendar to subscribe to earnings releases of popular stocks. And you can also view their financial data, not miss any important information about their financial reports, and you can use their trailing stop orders to control losses, lock in more profits if you're an active trader. The most important thing is that all these functions are free. What I like about Mumu is they offer zero commissions, no platform fees for stocks, options, and ETFs. Unlike other apps, it's packed with powerful market analysis features, no hidden fees, no minimum deposit, and no account management fees. You can tap into these pro-level tools at no cost. New users can transfer in from another account to Mumu without any transfer fees and also receive a cash reward of up to $300. Or receive 7 free fractional shares of the Magnificent 7 stocks with a deposit of $100. Free money. Click my link below and add an exciting boost to your trading experience right from the start. So back to the video. Now, what can we do in this crazy environment that we're in, where the job market is definitely weakening on a month-over-month basis? Like on a practical level, what can we do? Well, I'm going to answer this based on age group. If you're in college, I'd say that the best thing to do right now is to really understand the big picture. Understand that the system you're playing in is not going to be fair. Know that the odds are stacked against you. Know that it won't be easy. Know that by the time you graduate, most people will be so saddled in debt that people can't afford not to work. And understand that being humble and likable are equally as important as being skilled. The formula, really, is that likability and skills add up to success. Your personality, how likable you are, will play a huge role in your outcome. Absolutely huge. Now, if you're a working professional, a few years out of college, I'd say that you have to get that professional certification in your industry, if applicable, ASAP. Whether it's the bar exam, the CPA exam, CFA exam, PhD, whatever it is, you have to get it right away. The reason you want to get it right away is that the sooner you get it, the sooner that you can spend your time developing true expertise and developing your reputation in your industry. Being really good at one area of focus is where the pot of gold is. And having these certifications helps you from a personal branding standpoint. So where you are truly the expert, there is less competition and it's easier for you to stand out. For older folks, I'm going to give some general opinions. I don't want this to be interpreted as advice, but this is just what I think. Now, if you're older, you're probably a more highly compensated staff member at your firm. Your contributions are higher impact and more valued. But because you are paid more, you are also part of the higher operating leverage on your company's balance sheet. In plain English, in accounting, operating leverage means a high fixed expense base in the context of a variable sales growth structure. Revenue will always be variable. But if the company's growth does tick down, you need to anticipate what management does next. The mindset that I think that works best during these times is to not take anything for granted. One of the most practical things that you can do right now is to increase your savings rate, even if just a little bit. And if you're able to do so, start creating a secondary source of income. Start building an audience based on your expertise. If you're entrepreneurial, it's an excellent time to start a side business. Why? When the labor market is soft, like I've talked about in this video, you have an increased talent pool to choose from. People will want to get off the unemployment line and get a job as soon as possible. So you might be able to find talent that you otherwise would not have if the economy were strong. So it's time to use your weekends more productively. It's time to use your evenings more wisely. You want to be prepared for what's coming because it won't be good. Feel free to share your thoughts. Your comments are appreciated. Help younger people prepare for the brave new world ahead, one that will be far more difficult than they've ever imagined. Thank you for sharing your thoughts. Thank you for watching. I hope you enjoyed the video. Leave a like if you did. Read my stuff on Substack. I talk about investing. I talk about trading. I talk about scalping. We have to evolve. I'll see you next time.